Alrighty guys, and I'm back for another um stream trade recap. Welcome back. So I want to go over this trade on 18th of November, um, Tuesday. So not only am I going over this trade just for the trade recap, it's also so I can make the journaling a lot easier later, so I can just go over myself, reading what I did, right and wrong, etc. So first things foremost, I'm gonna do this. This right here. So this first trade right here is actually at the 11:50 macro, and I just want to also start by saying that this was indeed a loss streak on this day. So it was 3 losses in a row after a fair win streak. So as you can see, we don't just have like everyday green day. Of course, some of these, and realistically, on a day like today, which I don't have in my rules yet, but I've realized there's a pattern with me taking losses from high resistance liquidity runs or just really terrible market profiles. Because if I go on to the, I'm going to show this as a, just going to show this as a forecast of what I'm going to say later. So I haven't checked the price action for today, but it still looks shit. Actually looks decent, not gonna lie. But even here, look at this Asian session. It was terrible. I mean, say buy here because this breakout and everything and balance price range. You'd have to wait all through this, and then expansion, and then through this expansion, and then it's just ugly. But mainly, I want to go over is even though at 12 p.m. I did take those losses, and you can see at 9 p.m. it was the same, but in where is it? 12 p.m. So I ended up buying around here. You can see after 12 p.m. it wasn't that great either. I mean, made a sell here, that was decent. But then you just had all of this from the NYAM session, all of that. And then it made a pre-judice swing for the equity open, which would make you think you'd want to go higher and look for higher prices. Why? Because all this buy side doesn't come to it. It tricks a lot of that curve and then comes lower. Yeah. It's this order block comes higher to first presented FEG. Then eventually comes lower, option trade entry, lower, no, sorry, lower, and then 50% retracement, lower, optional trade entry, then lower, then your stop would be here, pretty much, and then lower, and then retracement, slash accumulation on this low, and something else in here probably, and then eventually comes lower. But you can see it was a grey, even here was a grey look, with all choppiness, and this is likely attributed to, if you go into Forex Factory here, on the economic calendar, you look at Tuesday, yeah, FOMC doesn't really mean much because there's only 2 of them. Usually when there's 4 FOMCs, I don't like to trade that day, or I like to trade after the FOMCs, since there was 2 here. So it wasn't much bad, like still maintainable. However, if we really look at it, what's tomorrow? Tomorrow is FOMC meeting minutes, and I always like to skip this day whenever there's a red FOMC day. And I usually be cautious before that day. However, if there is news before that day, I'm not as cautious. I'm like still cautious, but it's just I'll just be content with it that day. But as you can see, there was no news at the NYAM session here, none at all. There was this, but it's all yellow folder shit. That's it. Everything here is just yellow folder, yellow folder, yellow folder. So it's going to be low volatility, but it's going to be before an event, big event. Then you'll likely want to accumulate a lot of orders in that day. So the market direction might still be right. You might still be right. Yeah, it's going to go lower or it's going to go higher, wherever. They're going to be doing it in a fashion where it's reaccumulation, constant accumulation. That's why, yeah, on Tuesday you can see you might have been right about those cells, but it's going to do it in a way where it's going to be constant consolidation for those cells. to say again, here you might be right with that sell in constant consolidation. All right, and I was actually got in on the sells right here. But look, as you can see, I was right, and the optimal trade entry, I was right. Goes above it, and then what I ended up doing was, because it's an immediate term high, market shift, end up buying here, gives me the fake movement goes lower, and it's just really ugly. And then it gives those buys here, but it wasn't real, and then see it just it's lower, etc. But I want to move on to what they call it now, the reason I like the reasons I took these trades. Oh, yeah, nothing's random. So yeah, I've changed my daily drawdown out to 200 because I have to go low risk now. So that shriek, last shriek. So if you look on the, so this is the 1 minute I need to put on, right? And the 2 minute and the 3 minute. That's how I usually just do it, is just look at each time frame. And these are predominantly what I was looking at. So we'll go here, right? Yeah. We have right there. There's 2 minute SysD right here at the 11:42. Right here on the 1 minute. So yeah, at the 1 minute we already had this SysD here, pretty much. So I'm simply entering within this range of these change state deliveries right here. And then in the 3 minute, right here, we would have that exact same SysD, but it's all forming within one SysD. So I'm kind of aligning this all with a higher time frame. I'm looking for a higher time frame move above this high, likely looking for a low, high, lower, low. So it's more of an LR expansion, as I call it. But what I was aware of was these lows, how these lows were all SMT with Dow and ES did not take these lows, NQ did not take these lows, but Dow did, and then it went higher. So it was bullish SMT, you could say. However, these lows did become liquidity in the end, higher than lower. But yeah, so like SMT. And looking back at it, it wasn't really the best trade to take, because the displacement I made, it wasn't that prominent. Like this displacement was more prominent, but even it went through it anyways. And like what I could have really done in this situation was allowed for this to happen, and I ended up here. That's the problem. I entered all the way up here, not there. So it didn't really give me much equity. It gave me like this move lower, then a little bit of equity higher. But if I entered right there, the 50% instead, and then I had my stop at this low right here, I'd have gotten a good 1.88 R. So it would have given me a good amount of time to make a decision because of how it stopped taking this area, or at least go break even, at least something like that. Instead of entering here or up here, where yeah, it could expand and not give a retracement. It does that really, but then I'd have my stop loss here. I barely get 1 R, only get like 0.6 R at most. So it's not the best type of execution in terms of entry. And then you might ask, where's the liquidity? There's a shit ton of liquidity up here for one, but there's also this. Look, this is exactly what I was looking at. This at the time, this didn't form yet. I was looking at to rush this, and then eventually folded these to align as well, as you can see, kind of aligning right there, there. But another reason, and this failed as well, is because if you just look at this, if you zoom out very much, where is this? It's a retail bull flag, isn't it? So you got the stupid pole there, and then like it's a bull flag. And if this is the pole, then it should come for quite fast, shouldn't it? And it does that right here, really quick. So that's how retail bull flags work, I guess. But then again, if you zoom out even more, and I had the hindsight that this could be a market maker sell model. I just didn't like how all of this was the smart money. Is it called smart money divergence? No, the smart money reversal. I don't like how this would be the SMR, smart money reversal. It doesn't make sense, to be honest. But in the end, it was the smart money reversal because we had the reaccumulation here. And the reaccumulation was really big, as you can see. Right at that first stage reaccumulation, and then we had the second stage reaccumulation right there. And as you know, ICT says second stage reaccumulation, always getting on that one is the best one. Is it right here? Boom. Takes out the original accumulation right here, these lows, then makes more accumulation, stop goes higher, and yeah. So I want to go into the next trade right here now. So that's what I could have done with this trade instead. Was yeah, pretty much could have done something like that. Another thing in it is I guess is nah, I'm gonna leave it like that. So then we go into these next trades right here. And this was a bit foolish on my end, but I did this before the other day, and it was basically the same notion here, where you got 60. So this is the 1 minute right here. The other 1 minute 60 is already closed above, but I was actually looking at the 30-second when this happened. So if that's the 30-second, then you put the 1 minute here. You can see the 1 minute 60 is made there. So I was like thinking that this was just a Judah swing and then bear flag and then go higher. And essentially that is kind of what happened here, but let me see. So if you go to the 30-second now, you can see the 60 is a bit more prominent. We also have a busy inside of it. And it goes above it. So I entered right there, around there. What I'm actually aiming for in this range is I'm not aiming for the range high. I'm aiming for minimum expectation of it going to this 50% area. And if it goes to that 50% area, then thingy I'd go break even. I want to go short, I'll just go break even and see where it does. And then or either that I'd just like take my profit there and call it a loss mitigation, and then look for another trade to go short if it made the idea for short. As you can see, what I ended up doing was just stampeded lower, pretty much. So when it does that, when it doesn't come to the 50% dealing range, it refuses to come to it. It's usually indicative of bearishness, especially when it doesn't like take that intermediate term high. And that's usually the case, especially also when you have this first ST, then you got your second ST right here. This is the second ST. And following my model, as always, I like the second ST to enter the optional trade entry on. So that's exactly what I just do here was I actually entered the optimal trade entry because it was kind of obvious now that they wanted to send it lower for some reason. I don't know why. Because another thing is the original profile slash they call it now. The original profile slash bias for this day was bullish, only because they left this low, they left this low, so they took it just by tick, and then they left the London low. So when they do that, it's usually one-sided. As you can see, it was kind of one-sided. Then they made this bull flag, and then they went lower. But another reason, and it was because there is up here, not just buy-side liquidity, but there was an opening range gap on Thursday. It was a fully filled. It was just touched, and it was like one of those big gaps. So I was looking for that for a draw. It didn't go there, unfortunately. Just kept going lower. But if you look onto um, here, see. So this was the optional trade entry. So I'll put the 2 minute. Let's see that right here. So in the 2 minute, you can see I have an immediate time high that came to a SIBI. I don't expect this to be penetrated because intermediate time high kind of just want to check ES now at this point. If it penetrated that high or not. ES did. Let me check Dow. And wait, I think Dow, yeah, Dow didn't make it, but it made it later. So I don't count this as a second CST because it's not a proper retracement. This would be the second CST, and as you can see, Dow actually ended up did making that nice uptrend trade entry, comes into it nicely here. To find Dow, it would have been quite a nice 2R, like really fast. Dow hits it, wings right off, and then could have held it till like 6 risk reward, and you can see it comes into it again right here. The body's refusing to close above it. Of course, it goes above it anyways, but probably could have called to even 12 risk reward on this, as you can see. And it comes to it again here on the 50%. That's just how you know it's a proper area. But if we go on to MQ again, so that's that. And well, I'm going to enter it here, as you can see, 2 minute. You can see in the 1 minute, it's like a 1 minute kind of model. And then you can see on the 3 minute, it's still an immediate time high. That's why I don't expect this high to get purged or anything. Unfortunately, for some dumb reason, they just take it above it. And then they don't even hold the buy model either, even though there is like a clear phantom right here. Like they just touch it and then whatever. And when I entered on this buy originally, so this short was actually a loss again. So then I got to switch back to my buys that they might actually just take above these highs now, etc. And this could be the breaker, and this was the displacement. But I don't want to get too cocky here, so I'd rather wait for the retracement. However, I was also at the same time looking at these lows and the fact that it could actually come in these lows. Why? Because this is a low and then a lower high. Usually when it does a stopper, it'll be a low then a lower high, and it wouldn't leave reason for that lower high. So this in a way is liquidity right here. So when I did enter on this buy right here, it wasn't that it was impulsive. It was just more so that um, that this was like a failed move. Like subconsciously, I knew that this was the wrong move to take, but it still gave a couple of points from there. But the real mistake here was trading the stop right here after the second 60 because that thing just hit really fast. Instead, if because when I bought here originally, I had my stop actually right. Yeah, I think it was. No, it was somewhere here. I put the 1 minute. It was in the 1 minute breakaway gap. Yeah, so it was here pretty much. And then this would have given me a better decision to at least from 1R to do whatever. Because it did give 1R. So I could have gone break even at 1R because it was just an ugly move or etc. And eventually it would have hit break even, or you could have taken your profits at 1R, something like that. Because these lows right here and this low and then this low is just really ugly. So yeah, it gave the retracement, step retracement, not higher. And you could have seen this as a second 60, maybe as a scale in or something. I might have done that, might have not done that, I don't know. But it was a great kind of buy, even though there was always buy side. Now this buy was 10 times better. Why? Because if you look at this low, yeah, they leave that relatively low shit. So when you do see a buy in it, I think this is for my journal notes, I guess. That you really want to see that low be the last low, not low, then low, and then low, 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 and then lower high, lower high, lower high. Because it usually just takes it like that in one full swoop. This would be the much more better area to enter. So where would you enter within this range? Go to the 30-second. Okay, 30 seconds is actually give it, but But like there's all this liquidity here. Okay. Uh, the 2 minute, sorry, the 3 minute does give it here. It does give a LRR anticipation, but it's from there. So you'd want to essentially, if you would buy this, I'd probably want to 3 it right here and put my stop there and aim for about 2R, which it does give right here. In anticipation of it coming at least above these highs or about above these. So eventually it does reaccumulate a lot and it does come above these highs only. And what this could lay on signal is because it doesn't come for those highs and these ones, it's really bearish and it's really bearish, goes lower and then, yep, that is the end of the day. There you go. But I think like a new rule for these days where it's going to here and there's no news for the FOMC. So like for the meeting, like this stupid fucking news, it's called when there's no like like a pre-day, when there's no like news for that day, and it's all like yellow news folders, then it's better to go low risk on that day. And I'd probably like half the daily drawdown and half the risk on that day, or just not trade at all, because you get days like this where it's really messy, and then there's. But if there was news on this day, I think it wouldn't be like this. I think it would be a bit better, more volatility. And I guess you can contrast that with Dow as well. Dow, I don't think yesterday was shit, was it? Yeah, 3 o'clock it was actually. But around 225, it was actually quite decent. You can see you still gave that buy. And the reason Dow is like this, it's like somewhat better on days where the others are sluggish. Even here, like this buy in Dow, it wasn't as obvious as it was in NQ. It did look like a continuation lower. The reason this is in Dow, it's because Dow is it's only top 30 stocks, that's all. It's not top 100 or top 500. It's the top 30. So it's not as it's not as influenced. No, sorry, it is influenced by news, but like something like a yellow folder where it's um like this and it's pre FOMC, it won't have much of an influence on the top 30 stocks because they just got their own thing going on. That's why this thing moves crazy. Some people like that craziness. Yeah, so the market structure in Dow, it's a lot more. It will always be the same, pretty much. It will never change because of something or whatever. And that's why it does its own thing most of the time. As you can see, Dow, it came into all-time highs before making a dump. But then Q didn't do that. And with ES, it didn't do that either. So, yeah. But I'm going to see the price action today. How it is. Okay, so this is actually my drawn liquidity is yeah, it's low, which is this NWAG CE. This is an NWAG all day from remember this time where they dumped it and then they pretty much said to everyone buy the dip. Well, I think a lot of people made money off that dip, so they'll want to bring it as, eventually below that low, and also to this NWAG CE. Likely to come out trailer stops this low, that low, who knows? So they're gonna want to bring it below these lows. I'm thinking. That's why I think in my quarterly shift analysis, I do have that low. Pretty sure sell side. I should have a sell side. This is like the ultimate sell side that I want to bring at. And then maybe come January, February when they do crash it again. They usually crash it around January, February-ish. I want to see if they smooth the lows, but also this unfilled volume imbalance because they have set now that profile for it. The weekly, once it comes below this long closes, there'll be longer term price action moving lower. And last thing would be we are approaching that final quarterly shift and we're bearish as fuck. So it's likely just going to continue lower. Yeah, very much. think Larry Williams also pilot spied that out as well. Yeah, check Bitcoin as well. Yeah, nothing more different on this thing. It's just a shitty sell program. And I actually predicted this sell bar predicted from this wick, not that high, so it was a bit, that's like one off. I took a couple of losses here instead of taking the wins here, and I could have actually predicted it from this high right here. So I saw this as the move lower all the way down, but I didn't do that. Above it instead, and then pretty much it. So if I did take it above this high, which a lot of people did do that, I would have gone a good forest reward by now. Sheesh. Could have scaled in on each of these breakers as well. Where is it? Yeah, it would have been nice. That would have been. But man, whatever. Alright then, that's all from me for today. Trade recap is done more or less. But, yeah, this will just be for later. Anyways, journaling later as well. And yeah, I'm gonna leave you up to it. Take care.